Well, for more on the markets, I'm now joined by Peter Andersen of Andersen Capital Management. Peter, hi, thanks for joining us. What are you expecting to get then from these FOMC minutes out later today? What sort of debate do you think there's been between policymakers?
Well, it is probably the most anticipated minutes in quite some time, simply because the Fed paused at that last meeting. So we're very curious to hear of the thought process behind that. That was the first pause in over a year. Well, actually, the first pause in this rate hike regimen that we've been suffering through. So analysts will be looking at every possible change in the temperature, the tone, the discussion, the dissension, people who are hawkish, thinking that maybe they shouldn't have paused, et cetera. So I think there'll be a lot, we're hoping there will be a lot of material. But true to the Fed in the past, our hopes may be dashed in the sense that there might not be too much clarity on this. And that's probably on purpose because we hang on every word now. It's changed so much over the years. 20 years ago, we would not have this kind of anticipation, but now everybody is focused on this, and they're trying to figure out what the next step will be.
Peter, what about the next step for stocks? What do you make, for example, of that survey by Deutsche Bank, which found 3/4 of respondents saying the next big move in the S&P will be down?
Well, you know, surveys, there's all kinds of surveys, and that's what makes this market interesting and what actually makes a market, people that are buyers and sellers. So that doesn't surprise me. I take that in stride. But I do think the market psychology right now is we've turned the page for the first 6 months of the year. We're in the second half of the year now, and investors are probably looking back saying, gosh, I had no expectations that the market was going to finish so strongly, especially the NASDAQ in the first 6 months. Maybe it's a little bit of a time to take some winnings off the table. So it doesn't surprise me. However, I do think that psychology might be wrong this time in that we probably will still have a stronger second half. That's where I'm betting these days.
Can I ask you, Peter, about chip makers, which of course have seen a big run-up recently with the excitement around artificial intelligence, but now it looks like they could fall foul of US-China trade tensions as Janet Yellen heads to Beijing and the two countries are restricting each other's exports. How do you think that could play out?
Well, we've seen this before. Earlier, NVIDIA was restricted initially on sending certain technical aspects of chips, and then they came up with a workaround. I think that they probably, well, first off, it's speculation. The federal government has not actually declared this, but they have leaked the fact that they are considering this. And of course, in a sensitive market, even the word considering can upset the chip market, which is what you're referring to. But we'll have to see how that actually plays out. Even if let's take the worst case. Let's say that there were an actual ban on certain chips. This market is so connected across the globe that I would hypothesize somehow China would still have access to those chips, say through a third party in another country, which was not banned and could transfer the chips that way. So they will always find a way. Capitalism always does find a way. So a lot of this is posturing, I think, in terms of trying to maintain a strong but reasonable relationship with China.
Peter Andersen of Andersen Capital Management, thank you so much for joining us.